Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of pound dollar GBP USD. So if you're watching my videos for the first time, then please subscribe to my channel for regular market analysis and do check out the Forex analysis playlist on my YouTube channel for the analysis of other pairs like Euro USD, Gold USD, GBP JPY, and others. So let's get started. So this is the Forex chart of GBP USD, and yes, there was a heavy sell-off on GBP USD. Almost there was a waterfall on GBP USD yesterday. There was a support. Yes, there was a support around 1.3530, but the selling pressure was so high that market crossed the support and ultimately came down to 1.3450. Okay, so this was the level from where market took the bounce. This is also the Fibonacci 50% retracement level. Okay, this is also Fibonacci 50% retracement level. So yes, market did bounce from here, but if we look at the present scenario here, then we can see that uh, there is not much buying power right now. Okay. Try to understand the market psychology here. Market respected the Fibonacci 50% retracement level, but the selling pressure was so high, so eminent that market is still struggling to go up. Market is still struggling to go up. So if you have a buy position right now, then I'll suggest that you can continue with your buy position. Okay, that's your call. You can continue with your buy position. And if you are looking for a fresh window, fresh opportunity on the chart of GBP USD, then I'll suggest that uh, if yes, you can take a buy position around 1.3450 or the current market price, but you should be using strict stop loss and do not risk more than 2 to 3% of your trading capital. On my personal experience, I have seen market, forex market especially, respects 50% retracement level. Okay, it respects 50% retracement level, but the selling pressure was so high that market is struggling right now. Okay, as a result, I'll just request you, okay, if you want to take a buy, you can go for a buy, but you please follow proper risk management and use stop loss. Personally, I will not be trading here because I'm not convinced right now, because I believe that there are other options also where we can trade, where the risk is less, where we understand the chart better. That's my personal opinion. Okay, and in case market goes up from here, there is a good possibility of this level. Okay, there's a good possible this level 1.3530 will be acting as the new resistance for the market, or 1.3500. Okay, so in simple words, this is the resistance for the market right now, because we all know it very well that support becomes resistance and resistances become support in the market. So previously this was the support, so there is a possibility of this level to be acting as the new resistance for the market. So if market goes up and reverse from this level, we can also take a sell position. Okay, and my dear friends, in case we see market breaking the present support level. Okay, yes, this is market are full of surprises. So if we see market breaking the support level of 1.3530, okay, sorry, 1.3450 and going down, there can be a fresh selling in the market. And if you see that price is being supported by volume, or the size of the candles are big enough, okay, then also you can take a sell position. So this is the present scenario of GBP USD. Things are quite complicated here. Not a very good buy level, but still the we can see market is respecting the level. So yeah, things are quite critical. So using a proper stop loss and following strict risk management is extremely important, because see, after all, our job is to do analysis. Okay, you will be doing your own analysis, I'm doing my analysis, and our analysis can go wrong. After all, we all are retail traders, we cannot drive the market. Okay, so the only thing that is in the hand of the retail traders is the amount of loss. Okay, we can only decide the loss amount from before. Okay, so use proper risk management and use strict stop loss. Okay, bye bye.